raising US dollar impact your investments and wealth? Is your wealth safe or is the raising USD a hidden threat? Will your investments grow or lose value? Financial expert Mr. Satish Prabhu can explain it all. Satish Prabhu, over to you.
In the past, it was like, I think, for almost 40 years, US inflation was at a low level. But in the last 2, 3 years, they have seen that inflation has gone up post COVID because there was some supply chain issues. It took time for goods to reach the US, and they had a lot of money because of the dole that they got. If you remember, the US government put a lot of money in the banks of people who didn't have money, and they started buying things. And when they went to buy things, the things were not available because they were not reaching the US, because of COVID, a lot of movement across the globe was not happening. So these are called supply chain issues. So the supply chains were blocked, because of which the inflation went up, and it went up quite high. And of late, it has started subsiding, and US interest rates are down already by 1% from their peak. And yes, you're right that India needs to catch up with US, but US interest rates went up by 5%. Indian interest rates went up by 2.5%. So, but remember that as a country becomes more developed, it wants to reduce the cost of borrowing. So, India in the past, if you look at the 90s, India had interest rates in the range of double of what you're saying. The postal deposits offered somewhere around 12 to 14%. The public provident fund was offering 12 to 14%. Today, it's not possible. The rates are half of that today. But US was at 2%. Before COVID, US was at 2%. But does anybody know that in the 80s, even US was at 14%. US also was at 12 and 14%. But as the US economy grew, the cost of capital came down, because I said earlier that as people have more money, they start putting more money. Obviously, more money, the country has more money. And when the country has more money, obviously the cost of money comes down. And the government also wants that to happen. The government also wants the cost of money to come down. And as you develop, your per capita income rises, you tend to park more money into financial assets, and capital markets grow, and all of that happens, and you compete for money, and the rates of interest also come down. So US rates, obviously they were at 12 and 14 at one point of time. They have dropped to 2%, and obviously because of COVID, after that they have shot up again. But if you feel that US interest rates will keep rising, no, they will not rise. They may not go to 2%, they may go to 4%, but they will be at the lower end. So developed economies will always have lower interest rates, and as India develops, the interest rates in India will also fall. So now we are expecting RBI to drop interest rates, in 2025. So overall, you'll find that interest rates will drop, and the differential between US and Indian interest rates will be there. You will have lower interest rates in the US and higher interest rates in India. If the US interest rates rise, Indian interest rates will also have to rise. If US interest rates fall, Indian interest rates will also have to fall. But it may not be the same. Like if there's a 1% fall, India may fall by 0.5%. So, but the direction of the rise or the fall will always be there.
Thanks for your detailed answer. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like. If you are new to our channel, please do subscribe. Thanks for watching.